Imagine waking up one morning and realizing that the company managing $10 trillion, yes, trillion with a T, has just collapsed. BlackRock, the world's largest asset manager, gone. No warning, no slow decline, just poof. Your pension, your index fund, maybe even your mortgage, all suddenly in question. This is what would happen if BlackRock collapsed overnight. To understand the scale, think about this. BlackRock manages more money than the GDP of every country on Earth except the US and China. They own shares in Apple, Microsoft, Amazon, Coca-Cola, Tesla, and almost every major company you can name. If you've ever invested in an ETF or a retirement fund, there's a good chance BlackRock has touched your money, even if you've never heard of them. They don't just invest, they influence. BlackRock helps governments manage finances, central banks monitor stability, and corporations plan for the future. So what if they vanished? The moment the news breaks, global markets go into freefall. BlackRock's massive holdings, trillions in stocks, bonds, and real estate, are suddenly frozen or dumped in panic. Traders don't wait to ask questions, they sell. Index funds tied to BlackRock collapse, retirement portfolios lose half their value overnight. The Dow, the S&P 500, and the Nasdaq all crash in unison, not because of bad earnings, but because the system's biggest player is missing. Next comes the contagion. Remember the 2008 financial crisis? That started with mortgage bonds worth a few $100 billion. Now imagine something 10 times bigger collapsing at once. Banks around the world rely on BlackRock's funds to balance their assets. Governments invest national reserves through them. Pension funds and insurance companies depend on their stability. Without it, liquidity dries up, credit freezes. And just like that, the world economy enters chaos. Ordinary people feel it fast. The value of your 401k or pension evaporates. Mortgage rates skyrocket because the bond market has imploded. Even large employers might suddenly face bankruptcy if their stock is entangled with BlackRock's funds. People rush to pull cash from banks, fearing contagion, making the situation even worse. Within hours, governments step in. The US Treasury, the Federal Reserve, and the European Central Bank hold emergency meetings. They announce coordinated bailouts, because if BlackRock collapses, the global financial system collapses with it. Some countries might even nationalize parts of BlackRock to contain the damage. For the first time in modern history, you'd see the world's biggest investor become a public institution overnight. Not by choice, but by necessity. But here's the twist. BlackRock isn't a bank. It doesn't lend money the same way Lehman Brothers did in 2008. Its job is to manage assets, not borrow against them. That makes a sudden collapse incredibly unlikely, but not impossible. A major cyber attack, a data corruption event, or the failure of its massive risk management system called Aladdin could trigger such a disaster. Aladdin is the AI platform that tracks and manages over $20 trillion in assets globally. If it went down, even temporarily, where markets would lose their compass. So, could this really happen? In theory, yes. In practice, not easily. BlackRock is so integrated into global finance that even governments treat it as part of the system itself. It's too big to fail and small, and perhaps too big to imagine failing. But that's exactly why it's worth asking. What happens when one private company quietly becomes as powerful as a nation? And if something ever did go wrong, who would bail them out? BlackRock collapsing might sound like fiction, but it's a reminder of how fragile modern finance really is. Because when a handful of institutions control the world's money, we're all just one bad day away from finding out what happens when it stops.